In fact, Aditya Khemka, the fund manager at Incred Healthcare PMS, joins us now to talk about that. Aditya, the last couple of days has been spent in analyzing what happens once Torrent Pharma acquires Cipla, if and when that happens, right? So the news is out there, but you tell us, what is your prognosis and what's the way forward for retail investors who hold these shares?
So look, good morning and happy Janmashtami to you and your viewers. So if Torrent were to acquire Cipla, first of all, the report isn't confirmed and we don't know if this is going to happen. So as investors, the first thing to look out for will be, at what price do they acquire it? Generally, companies end up paying a premium to the current market price of the stock which they are acquiring. If that is the case for Cipla, in our view, it might be tough for Torrent to justify that acquisition given the valuations that stocks like Cipla are at today. And to give a premium to that would be a very, very difficult sort of situation to show value for the acquisition. So that is number one. Number two, such a large ticket acquisition, Torrent does not have the cash to do that. So either they will part dilute equity or they will, they will do the acquisition with equity and cash. And for that, they will have to dilute, the promoter will have to dilute, the minority shareholders will have to dilute, or they will take substantial debt, which again puts a stress on their P&L and, everything. So we don't know whether it's going to happen, but if it does happen, it's a deal that, will be a transformative deal for Torrent Pharma. And if it's done at the right valuation, if there is the right amount of synergy that they're able to extract, it can be a very, very big positive. And at the same time, if the valuation is not right and the synergies are not enough, it can be a big negative as well.
Aditya, sorry, just a very basic question. Have we heard from Cipla themselves that they are indeed going to sell, that they will sell? Have you heard it? Because there are so many stories about who all is in the race to buy. But go on.
Yeah, look, so my understanding is that, and this is purely my understanding, Cipla hasn't made any official statement or unofficial statement on this side. But my understanding is that Cipla has a succession issue. Yusuf Hamid, is now significantly out of the game. He's more of a mentor. He's not actively managing the company anymore, and there is no succession plan. In fact, if you look at India, many companies that started in and around the liberalization era, the first generation entrepreneurs will be exiting the businesses now, and you'll have this kind of probably things happening in multiple companies now in the next few years. Because these entrepreneurs would have been working for 30, 40 years now. And, if the second generation isn't interested in the business, they will have to sort of encash what they have built over the last 30, 40 years. So Cipla may be a classic case. I think if you think of Cipla as historically, Amar Lula used to run the business till 2011. Then came Subhanu Saxena, an external hire. Amar Lula himself was an external hire. And then, Umang Vohra now, who came from DRL to Cipla. So clearly, succession planning isn't there, and it just may make sense for the Hamid family to cash out at this point in time, especially when the sentiments towards the business is very positive, the stock prices are fairly rich. It's a good exit point.
What's your, Aditya, hi, morning. What's your target price on Cipla?
So look, we are an EMC, we don't issue research reports, and therefore we don't have target prices.
My bad. Sorry for that. Let me ask you about something else. I mean, in case you have any thoughts on this, because this is a very different company and a different development in the pharma space. I don't know if you've seen what's been happening around InSwift Labs, and that's getting a lot of attention. The company yesterday decided to, sell off 96% of its business. I think the entire API business, CRAMS business, got sold off. They're getting over 1,600 crores of it from the sale. But then they're, pushing 600 odd crores into a separate group company, which they say they will, I think, merge with InSwift later or something. It's pretty complicated. And the stock has been going through the roof. So it would be highly confusing for a lot of investors or even, people who are watching on the sidelines wondering what should be done or, what to make of it. What's your sense?
So it's very difficult for me to comment on what InSwift is thinking because, we haven't heard from the management anything official. So very difficult to understand what they wanted to do when they sold a large chunk of the business. And when they are merging with a private entity, generally, we avoid looking at companies where the promoter is merging a listed entity with a private entity of his, because then there are conflicts of interest that needs to be looked at. Having said that, end of the day, India has many sick API companies. These API companies became sick over the last 4 decades because of the intense competition we had from China. And now, at this stage, we have some of these companies that are doing capex and trying to grow, and some of these companies which are basically trying to sell out because the sentiments towards the API business in India is improving now. So Insys seems to be a case of the latter, where they are exiting the business. And then what the promoter decides to do with the cash and merge or not merge, I mean, that's something that we haven't really had any color on.
The stock of the year, I think undoubtedly in the pharma space has been Aurobindo Pharma, right? I mean, it's almost doubled this year. And what's going so right with the business, A? And B, there's a lot of talk about the company exploring possibilities of restructuring their Eugia Pharma business. What do you think the prospects of that look like, and what's the way forward?
So look, Aurobindo Pharma's majority business is the US generic business. What we have been hearing from other sell-side research firms is that the business is slightly stabilizing in terms of price erosion, so which used to be double-digit last year is somewhat mid-single-digit this year. And I think Aurobindo, being one of the largest companies in the US generic space, is a leveraged play on that. So it is not surprising that the stock has doubled because, or gone up even more than double in the last 1 year, because the stock had fallen very significantly. So if you look at a 5-year return on Aurobindo stock, I think it's 0%. But if you look at it from the last 1 year, yes, it has doubled. So the time frame really matters. What I have been saying all along is that the US generic business is a very commodity business, and you have to pick your entry-exit points. You cannot stay invested in this business. It cannot be a structural story. So 1 year back, maybe it was a great price and a great time to get into something like an Aurobindo. Today might be a completely different story. So we feel that the US generic business is continuing to be very, very competitive. The price erosion is still there, even though it has moderated, but it is still there. And there are a couple of large products that these companies have launched, like Revlimid, etc. But those are temporary cash flows. So if those temporary cash flows get a multiple of 15, 20, implying that these cash flows will last for 15, 20 years, then it's a ticking time bomb. At some point, it will explode.
Aditya, just to wrap this up, just tell us what are your top ideas in the healthcare, in the pharma space, actually pharma and healthcare, hospitals.
Sure.
Go on.
Sure. So I run the Incred Healthcare PMS fund. So I will give you the top 5 picks that we hold in the fund. Our largest pick today is Jubilant Pharma. That's a company which is engaged in the diagnostic ancillary industry as well as API industry. Second largest pick is RPG Life Sciences, which is a domestic branded formulation business. Our third largest pick is Krishna Diagnostics. It is a diagnostic player in India, B2G. Fourth largest pick is Thyrocare, which is again a diagnostic player in India, B2B, largely B2B, some element of B2C. And our fifth largest pick is HCG, Healthcare Global, which is a cancer dedicated hospital in India.
So in this hospital space, there are a couple of new listings and there are new IPOs as well, like Jupiter, right? Jupiter Lifeline. And of course, this space has picked up in a big way. You think there's a lot more scope despite the kind of rally that we've already seen?
That would be very stock specific. To be honest, some of these stocks I feel are priced way beyond what growth they can deliver. And some of the other stocks are relatively very underpriced. So the space as overall seems fairly valued, but there are stocks on one end of the spectrum and there are stocks on the other end of the spectrum. So you have to be selective into what you invest in.
Okay, got it. Aditya, great speaking with you. Thanks a lot for providing clarity on this entire sector and what you should be watching out for. That's Incred with a view on the healthcare space, which has undoubtedly been one of the big spaces to watch this year.